Okay, over to you, Chair Reed.
Oh, thank you. Thank you. Good morning, everybody. I am going to call this meeting to order at 10:02 a.m. It's August 20th, 2025. And thanks to everybody for really helping us make this special meeting happen. It's an important meeting, and I know we usually have August as the time when everybody rushes to finish their vacations and take a break, but welcome back. I think we want to go to, public comments. So I'm calling to order, and now public comments. Do we hear any public comments? Hearing none. Item number 3, the consent agenda has the minutes are on it. And
that's correct. That's the only resolution we have on the consent agenda, or the meeting minutes from our July 25th meeting. We also included in the board packet staff approved transactions that are consistent with our comprehensive plan and budget for transactions under $500,000 and no more in aggregate than $1 million. So the staff has approved 4 CPACE transactions totaling about $572,000 for projects in Canterbury, New London, Salem, and Waterbury. And we have nearly $840,000 in 2 energy storage solutions projects, non-residential projects in New Canaan and Stamford. So you will see those report outs in the board mailing. So if we can approve resolution 1, the meeting minutes, that would be great.
Okay. Do I hear a motion to approve resolution number 1?
So moved.
So moved.
Second.
Okay, thank you, and thank you. All in favor?
Aye.
Aye.
Opposed? Abstaining? All right. Moving on. So investment updates and recommendations. Bert?
Yes, thank you, Chair Reed. This is a big day for us in terms of our Green Liberty Bond issuance. So we've been working quite diligently over several months. Our last issuance was in 2021. So 4 years on, this will wrap the 3rd in the series of 3 of issuances of bonds that are backed by our Shreks, which I'm going to turn now to David Beach to walk us through this, and then when he's completed his part of the presentation, he will then hand it over to Bruce Chudwick, bond counsel at Shipman and Goodwin, who will walk us through the resolutions and the bond documentation that is necessary for the issuance of the bond. So without any further delay, let's go to David Beach. Thank you, David.
Let me see.
Thanks, Bert.
David,
I think
you want to...
BG does a great job on this slide. Yeah, you go.
Okay. Yeah, let me tackle this one. Great. Then I'll turn it right over. So, yeah, we're excited to be bringing this proposal to you. As many of you know, our 3rd goal as an organization is to pursue investment strategies that advance market transformation in green investing. We have designed our Green Liberty bonds. Kim, you will know that your predecessor, Bettina, who served on the board on behalf of the Treasurer's Office, worked with us and our team, and Bob Lamb and Bruce Chudwick, back in 2019 on our Green Liberty bond structure, which was modeled after the war bonds of 1942. World War II saw over half of Americans, 85 million people, come together to support their country, fight for liberty and freedom through the purchase of Series E war bonds. In World War II, there were over 16 million U.S. servicemen and women who served in the war, and over 400,000 of them lost their lives. The war cost the U.S. over $300 billion then, which is nearly $6 trillion today. 45% of the funds to support the U.S. involvement in the war came through taxation. The remaining $185 billion was raised through war bonds. Over $140 billion in those bonds were sold to large institutional investors such as banks, insurance companies and corporations. But also over $40 billion in bonds was sold to individuals through the Series E war bonds. So we wanted to design our bonds, our Green Liberty bonds, after that model, and working with the Treasurer's Office based on their experience with Husky bonds, Yukon bonds, and the retail accessibility of those bonds. Based on their experience issuing green bonds to support water infrastructure projects, they really helped us design this Green Liberty bond structure. So there are three features of our Green Liberty bonds. The first is that they are retail accessible. So like the Series E war bonds, they're available to retail investors where the bond denomination value is not more than $1,000. So that is the first component of it. The second is that the use of proceeds are to be invested in projects that confront climate change. In this case today, we're going to hear about projects that lead to the reduction of greenhouse gas emissions. And thirdly, from a consumer protection perspective, the bonds need to be certified and verified. So we have independent verification and certification from Kestrel and the Climate Bonds Initiative, which we're going to hear about in a second. That was our first foray into the bond market back in 2020. And our inaugural issuance resulted in the Bond Buyers Deal of the Year award, the best innovation financing transaction of the year. So we are excited now to be issuing our third Green Liberty bond. And with that as some context on the overarching design, let me turn it over back to you, David. Thank you.
Thank you, Brian. I'll just start out by highlighting, some of our partners for the Green Liberty bonds here. A lot of these names are folks we've worked with now for the third time on Green Liberty bonds. So I won't work all the way through them, but while we're on this slide, I'll note that we also have on the line here today, Bob Lamb and Autumn of NW Financial LLC, our municipal advisors. We have Bruce Chudwick on from Shipman and Goodwin, and Brad Friedman from Ramirez is on as well. So they will be they're here to listen in and perhaps add some context if and when we need it. You can go ahead and move on to the next slide. So just want to highlight quick the financing schedule. So today, obviously, the 20th, we have our special board meeting. We're planning to do a first posting of the preliminary offering statement and begin investor presentations around the middle of September, with a retail order period happening at the end of the month, and then closing and delivery happening in the middle of October. This schedule is built around the state's general obligation bonds that will be going to market just before we go to market in September. So as Brian mentioned, for transparency's sake and to give our investors some extra confidence, we've gone ahead and gotten a green certification. We work with Kestrel. This is a company that we've worked with now on two separate Green Liberty bond issuances, and they also support our Green Liberty notes. We have implemented a programmatic certification with them, and they are going to label the Green Liberty bonds as certified green bonds. And then we'll be reporting annually on some of the impacts associated with the bonds. Okay. So looks like a lot on this slide, but we'll go through it fairly quickly. So this all came about from the RCIP program when the Green Bank offered incentives to homeowners and third-party owners to install solar PV systems. In exchange for those incentives, the Green Banks got the rights to the RECs generated from those systems. So we call those SHRECs. You can see what that acronym stands for there. It's a Solar Home Renewable Energy Credits. And then under a master purchase agreement with the two state utilities, the utilities are required to purchase those SHRECs at a predetermined price over a 15-year lifespan. So you can see highlighted below, the SHREC purchase price for tranche 5 was $35, and it was $34 for tranche 6. And you can see their starting dates and end dates there as well. And then the Green Bank will be establishing a special capital reserve fund that's funded at MADS. That stands for maximum annual debt service, and that is to support the bonds. And to get that, we need treasurer and state support, which we'll be discussing in a little bit. On to the next slide. So here's a transaction diagram. So again, the homeowners and third-party owners delivering SRECs that the utilities then pay for. With the bonds, those funds will actually go straight to the trustee and will be used to support the bonds, which will pay then the retail investors and institutional investors. And if there's anything left over, that will go back to the Green Bank. So on to a little bit more about the financing here. So the approximate par value is 17.85 million. That is subject to change. That's pricing that's a little bit old at this point. The biggest factor here, of course, is interest rate. So we are asking the board for support to issue up to $20 million of bonds. You know, as interest rates decline, that means more proceeds for the Green Bank, which is a great thing. You can see the description of the different serial bonds there on the right. As with the prior Green Liberty bonds, the principal will be due on November 15th, and there'll be semi-annual interest payments as well. We've also worked to get the denomination down to $1,000. That's the lowest we can go, and that's focused on that retail attractiveness that Brian mentioned earlier, trying to get everyday citizens to be able to invest in these offerings. And as I mentioned before, these are going to be certified climate bonds. So how are we going to use these funds? First, we use the Green Liberty bonds to recover the expenses associated with the RCIP incentives. So you can see at the top there, that's the total RCIP incentives for these two tranches. These tranches have been delivering SRECs for a few years now, and so we have already applied the SREC revenues that we've received to those incentives, but a significant portion of this bond offering will be used to pay for the additional incentives that have yet to be paid on those tranches. The next step down is the SCARF reserve account. So that is that special capital reserve fund funded at the maximum annual debt service that provides a bit of a cushion for these bonds and is what we need treasurer's office support for to secure a SCARF reserve. From there, the next rundown is the financing costs. So these are costs associated with this issuance, as well as the warehouse facility that we've had for these tranche 5 and 6 over the past couple of years. And then the last bullet there is administrative costs associated with the RCIP program for these two tranches. So the total use of funds there is at the bottom, and that's a conglomeration of the funds used on RCIP incentives, the SCARF reserve, financing costs, and the administrative expenses. Okay, so I think we actually hit on the financing schedule earlier, so we can skip this slide and go to the next one. So I've mentioned a couple times now with the SCARF reserve, we work with the Treasurer's Office and OPM to receive approval from them to offer us SCARF backing from the state. And to do that, we have to provide them a memo of self-sufficiency, which was included in the board package this week. And so statutorily, we were required to be able to pay the principal and interest on the bonds, establish, increase, and maintain reserves, pay the cost of maintaining the projects in good repair, and also ensure they're properly insured, and pay any other costs as may be required. So on the next slide, you can see the self-sufficiency findings that we have reported to the Treasurer's Office. So number one, the project revenues have been confirmed by the independent engineer and are sufficient to pay all costs, expenses, and debt service. We'll go into that a little bit in more detail a little bit later. The utilities are statutorily required to purchase the SHREC tranches at the specified price. And you can see their credit ratings there, which gives confidence in their ability to continue to purchase the SHRECs. Finding 3 is that production risk has been mitigated through operations and maintenance agreements, as well as our insurance coverage. Finding 4 is that based on the independent engineer's findings and the way the bonds have been structured with the help of our underwriters, we are meeting a 1.15 debt service coverage ratio using a P90 scenario. I'll talk about what P90 means in a little bit. And that average is 1.08 on a P99 production level as well. And then finding number 5 is that the Green Bank will be supporting the project through a project support commitment undertaking, which offers the economic sources that are unrelated to the cash flows of the SHREC to be used to help support the SCARF reserve if necessary. And the state requires that we use our funds to replenish the SCARF before the state ever has to replenish it themselves. And so that's what the project support commitment undertaking is all about. So I'll go into a little bit more detail on the next slide about some of these different items. So as I mentioned, we have a system of O&M and insurance to protect and ensure we have strong energy production. So system owners by themselves are primarily responsible for maintenance and repairs. As you know, I think we generally know there is an economic incentive both for the system owner to ensure higher production, because that means more savings for the homeowner, and for the third party owner, that means greater PPA payments. So we monitor these systems through an energy platform and have the ability to notify system owners to help them resolve any sort of production issues that we see on our end. All contractors per the program are responsible for 5-year workmanship warranties. And the equipment has the warranties that you see there. Systems are also covered by property and casualty insurance via the homeowners and other insurance by the third-party system owners. And we have our own parametric insurance coverage. I want to highlight that last bullet there. So there was over 46,000 RSIP projects completed from when the program was begun in 2012. And from our analysis, all but 233 are still in operations as of June of this year, which is a loss rate of just 0.5% over 13 years, which is really great. On the next slide, I'll tell you a little bit more about our independent engineer. So we have worked with D&V GL now for the 3rd time, who conducted a technical due diligence on this tranche. They provided 25-year P5, P50, P90, P99 generation forecasts. What does that mean? P stands for probability. And so P50 would mean that the portfolio is expected to produce more energy than that 50% of the time. With a P90, it means that the portfolio is expected to produce more than that 90% of the time. In P99, the same thing, 99% of the time. The thing that's a little bit different about this independent engineers report is that because we are issuing these bonds not directly after the tranches have been created, these tranches have been active now and generating SHRECs for 3 or 4 years. They were able to actually use production figures from the portfolio, which has allowed them to be a little bit more accurate and to really kind of be able to dial in those P90 and P99 figures because they can actually see how the systems have been producing. So speaking of that performance, on the next slide, I'll walk us through some prior performance. So with the first two tranches of Shreks, we did an asset-backed security agreement. That agreement has been, the credit rating has been reaffirmed every year since then. That's performing at 98.5% of P90 expectations, though I point out below that those two tranches are performing at 103% of P90 expectations over the past couple of years. There were some issues in 2021 and 2022 with storms and 3G meters going out. But the Shrek tranches that are supporting the Green Liberty bonds that we issued in 2020 and 2021 are both performing well over 100% of the P90 expectations. And the two tranches that are supporting this Green Liberty bond issuance are performing well over the P90 expectations. And again, part of the reason there is that DNV was able to actually use actual production of these systems to create the baseline and inform their P90 figures. So that chart there shows the Shrek generation from Tranche 5 and Tranche 6, which are supporting this issuance, and how that relates to the P90 figures that DNV forecasted. All right, we'll move on to the next slide. So this dives in a little bit to the structure. So again, $17.5 million issuance now that will change based on final interest rate. We have sized based on a self-sufficiency, presuming P90 projections. So that means that we size the debt service payments based on the revenue we expect to receive if the portfolio was to produce at that P90 level, which, as I showed you in the last slide, the tranches, at least to this point, have been performing well above that. That level also results in debt service coverage of well over 1 on the P99 level, which just offers a little bit of extra security. So there's kind of a lot going on in terms of this chart. But what you can see on the left is the different revenues based on those P90, P99, or P50. The projected annual debt service is in the middle there, and then the coverage ratios are on the right side. I'm going to now pause here. We've gone through a lot. The next phase is I'll turn it over to Bruce Chudwick to talk about the bond documentation, but wanted to pause here and make sure we take a time for any questions from the board.
Yeah, there's a lot of information there, certainly a lot of numbers, and thank you, David, for going through that. We did take time to sit down with the Treasurer's Office as well as OPM. Both the Treasurer's Office as well as OPM need to approve of the use of the Special Capital Reserve Fund. So that's the reason for making an effort to make sure that was well presented on that side. So, and we got some questions back from the Treasurer's Office as well as counsel to the Treasurer. So on this matter, so we addressed those in the revised memorandum that was circulated to the board. So I think we're okay as far as the questions of the Treasurer's Office and OPM, but we'll open it up to everyone, including you, Kim, if you want to throw any questions out and clarify anything from your perspective.
Well, I have to say this was extremely helpful just from a high level view. The memo itself is very dense. So pulling back and looking at it from this sort of, 30,000 foot level was extremely helpful for me. But I have been talking to Ernie offline, and I don't at this moment have any additional questions. That's just on my part. So.
Okay, fair enough.
Bert, I have just one quick question. If the production exceeds the P90 or P99 level, does that mean there's additional revenue from the systems that are in that tranche? And if so, does that fund, that extra revenue come to the Green Bank, just goes into our balance sheet, or what happens to it?
David, would you like to address that, or?
Yes. So as long as the SCARF reserve is fully funded, any extra funds do end up at the Green Bank. Though they may often sit with in the trustee in interest rate bearing accounts, but they are eventually funds that are to be used by the Green Bank.
And just building off of that, so Matt, per our statute 16245 FF on the RSIP, the proceeds that come back from the sale of these Shreks is to support the incentives, the administrative costs, and the financing costs of the program. So anything coming back would be supporting those 46,000 plus systems that are out in the market producing renewable energy credits, who, you know, since the utilities buy them, support their compliance against the renewable portfolio standard. That would be the use.
And I don't know if Jane, are you our CFO? Jane, are you on the line? Because I know that Jane keeps a close eye. Jane and Dan Smith, Jane Murphy and Dan Smith, keep an eye on these balances like a hawk. And the extent that we are able to pull excess revenues, as is described in the indenture, it's totally in line with the indenture. But to the extent that there are surpluses, there's a final pot that this all rolls into. I think it's called the Economic Development Security, account or something like that. Then we are able to pull funds from that account, because that's the last bucket, and that's freely available to the Green Bank. So as the waterfall progresses, as the funds come in and they hit all these different accounts as outlined in the indenture, then the last one really is the account that's available for use by the Green Bank, and we pull those funds periodically, typically once a year, once the payment cycle is complete, each November.
Yep, that is correct, Bert. And we have taken funds out of the previous Green Liberty Bond indentures, and usually that does happen in coordination with the trustee after the payment, just as you stated.
Thank you. Okay, if there aren't any other questions, then I would like to move to Bond Counsel Bruce Chudwick, and he can walk the board through the resolutions that we're asking the board to pass, and then we'll get into a number of the documents that are part of the bond package. So over to you, Bruce.
Thank you, Brian, and good morning, everyone. Thank you for the opportunity to be working with the Green Bank team on this financing once again, and it's been a pleasure doing the prior two issues and putting it all together for very successful financings for the Green Bank and for the program. What you have in front of you are the resolved clauses. I'm not sure whether we can scroll up just briefly. That's the whereas clauses. I'm not sure whether that's part of your package, but the bond resolution has a series of whereas clauses, which basically captures what David Beach just talked about as far as what the Green Bank's all about, being a body politic and corporate. We're going to be using a trust indenture. It's for the RSIP program, this is going to be the funds will be used for the next tranches 5 and 6 of the program. The other ones have been financed with previous Green Liberty bonds. And the Green Bank determines that it is necessary and appropriate to issue the bonds in order to fund the program. So then the actual resolutions you have in front of you. And so first of all, this resolution is very, very similar to what we did in 2021, almost exactly the same, because the program has not really changed and how we finance it has been basically stayed the same. So this brings it all together of what David Beach and the others just talked about, is that, first of all, the Green Bank hereby determines that the issuance of the bonds is hereby authorized and approved, and that's an amount not to exceed $20 million to pay for the costs that David just explained, the cost recovery, reserve funds, and paying of financing costs related to the bond issuance. The terms of the bonds will be determined by the president of the Green Bank or any other authorized officer as we move forward to pricing and closing. Further resolved, the bonds will be special obligations of the Green Bank payable solely by the pledge of the revenues that are generated by the projects, and those are pledged in accordance with an indenture of trust, which has been included in your package, and we've been in touch with the trustee on this, again, pretty much the same as the prior deal, and the indenture is in place. And as was just mentioned, at the end of the waterfall, that's where the excess monies above the P90 levels would flow out to the Green Bank after the debt service is taken care of, any replenishment of any reserves are taken care of, and the final monies come out through that last fund. Next page, please. There we go. This is a critical one, that the findings of self-sufficiency are approved and adopted by the board. This is a key piece to getting the Office of the Treasurer and the OPM Secretary to approve the SCARF backing for the transaction. This is required. So everything that was in your self-sufficient report that David just highlighted is hereby approved. If there are minor revisions to be made to the report, then the president or any other officer are authorized to do that, as long as there's not a material change in the findings and determinations. Next one is further resolved, the project support commitment and undertaking agreement, which is also included in your package, is also approved by the board. This is the agreement that provides, as David Beach indicated, if for some reason there is a shortfall in debt service or in revenues to pay the debt service, the Green Bank steps in and pays that before SCARF is even employed. So that's sort of your balance sheet backing for the transaction to ensure that the SCARF draw is remote, if anything. So next one's an indenture of trust with the Bank of New York, Mellon, same trustee as we had in 2021. The form of that was included in your package, and that is hereby approved by the board. Further resolved, the interest on the bonds is includable in gross income for the holders thereof for federal tax purposes. This is a required finding or determination by the board in accordance with your statute. Unfortunately, this cannot be done tax exempt. There's no exemption in the Federal Internal Revenue Code to provide that these are tax exempt, but they are tax exempt for Connecticut income tax purposes for people that have to pay Connecticut tax. Further resolved, the bonds will be sold to Ramirez & Co. Through a bond purchase contract, and that's been provided as part of your package as well. The Ramirez team was involved in the 21 and 20 transactions that were done, and also a continuing disclosure agreement, which requires that you provide ongoing information to the bondholders about the program, which was also included in your package, is also approved as part of this resolution. Further resolved, the preliminary official statement, which is basically your offering document that David Beach referred to, which is included in the package as well, is hereby approved. Again, with changes that'll be made as we get ready to move toward posting that and pricing. And an authorized representative is authorized to make any changes to that as we move forward. Further resolved, in connection with the issuance of the bonds, the authorized representatives are authorized to revise and sign and deliver all the documents we just talked about: the indenture, the bonds, the project support commitment and undertaking, the purchase contract, the continuing disclosure agreement, the indenture. Everything is approved for them to sign off on and to pay financing costs for the issuance of the bonds. Further resolved, any actions that have been taken thus far are hereby ratified and approved. And then finally, the catch-all, that the proper Green Bank officers are authorized to take any other actions that they deem necessary and desirable to carry out the intent of the resolution and issue the bonds for the program. So that's a resolution for your consideration and adoption this morning. And if you have any questions, I'd be happy to address them.
This is Lonnie. I mean, I love in this time of uncertainty about funding options that the investment opportunities we've created are really working. So this is very reassuring, and congratulations to all. Do I hear a motion to approve Resolution 2, or are there any other questions or concerns? Or okay,
I'll move resolution 2, Lonnie. Matt.
thank you, Matt. Do I hear a second?
I'll second Adrian.
Adrian, thank you, Adrian. Okay,
Welcome.
all in favor?
Aye.
Aye.
Opposed? Abstaining?
I will be abstaining, Chair.
Oh, okay.
Kim Morse, yep.
Thanks, Kim. All right. All right. Thank you.
Okay, the next item, Chair Reed, we're moving to is the extension of the Green Liberty Notes program. This is going to be straightforward. But first, thanks very much for the Green Liberty bond approval. We're all excited about that, and I know the Ramirez team and NW Financial will do a great job in terms of making sure those bonds move. Okay, so on to the Green Liberty Notes. David, back to you. This should be pretty straightforward. Thanks.
Thanks, Bert. Yep. So Green Liberty Notes, this program was first approved back in July of 2021. It's been expanded a couple of times. And then the program actually transitioned from the original crowdfunding marketplace we worked with, Raise Green, to Honeycomb Credit in last December 24. And so today we're just seeking another 1-year expansion to do 4 additional Green Liberty Note issuances at the same $350,000 level. So next slide. Just want to highlight here that we're still seeing a strong interest rate spread between the purchase discount rate that we're purchasing the SBA loans at, which is the collateral that supports the Green Liberty Notes, and the interest rate that we are offering to our investors. That spread has been over 100 basis points, or more than a full percentage point, for each of the last 4 issuances, and has averaged closer to 1.25. With that, we can go to the last slide. Here, I'll just highlight some of the great results of the program. We received more than $3.75 million of investment from more than 525 individual investors. More than 250 of those have been Connecticut investors, so about half. And more than 315 of those have come from investments of $1,000 or less, so that's over 60%. After the first 2 issuances, we got our feet underneath us, and we have had 11 consecutive sold out issuances. We've now issued 2 Green Liberty Note offerings on Honeycomb Credit. They have both sold out and received the highest number of investors we have ever received for issuances, including the most investment below $1,000. On the back end, the repayment process has improved for investors and the Green Bank. We're able to use Honeycomb's wallet function. We continue to issue 1099 interest tax forms. We did that again this spring. And we continue to offer reinvestment for those investors who want to take advantage of compound interest. So on the next slide, you'll see resolution to expand this program for another year in 4 additional issuances.
And the only thing I'll add on top of that, David, I'm not sure if you covered it, I might have missed it, but I think we're in at least 40 states now.
Yes.
So everybody across America seems to love our Green Liberty Notes. So back to you, Chair Reed.
Well, and I should say that that means that the numbers of investors keep increasing, which is great. An excellent sign. Okay. Do I hear a motion to approve Resolution 3?
So moved. John Harity.
Thank you, John. Do I hear a second?
Second, Jamie.
Thank you, Jamie. Okay, all in favor?
Aye.
Aye.
Opposed? Abstaining? Excellent. Moving on.
So this item here is about an exciting partnership that arose from our conversations that we have ongoing with the utilities, Eversource and Avangrid United Illuminating. And Barbara Waters is going to take us through this rather quickly. It's not using any of our dollars, I'll say up front, but it is using our Smarty program, and it's quite exciting. So Barbara, can you promptly walk us through this? Thank you.
I sure can. So my name is Barbara Waters, and I'm looking for approval on another Smart EIRB, as we talked about last month. Eversource and Avangrid are interested in supporting this promotion because they're behind in their state goals, and they're looking for a way to increase installations of heat pumps in the state. As Bert said, no green bank funds are involved. It's going to be up to $1 million of CEEF funding. They may decide to direct some of that money towards their incentives instead, so we may not see the entire $1 million put against the IRB. We are currently planning on a mid-September launch and at the same time as the battery storage IRB. And next slide, please. As you can see, the structure is very similar to the battery storage IRB we discussed in July, with terms limited to 5, 7, or 10 years. And both standard market rates and LMI rates. The utilities are still working on which proposal they are interested in, and once we get approval, I'll follow up with them to finalize. Any questions?
Okay, no questions. Do I hear a motion to approve resolution 4?
So moved. John Harity.
Thank you, John. Do I hear a second?
Second, Joe.
Thank you, Joe. All in favor?
Aye.
Aye.
Aye. Opposed? Abstaining? Excellent. Okay. Now we're going to discuss something that's going to involve commercial information given in confidence. And so I need a motion to move into executive session.
That's right, Lonnie. And if we can have the following people join us in executive session, that would be great. Sergio Carrillo, Sarah Harari, Bert Hunter, Brian Farnan, Jane Murphy, Dan Smith, Eric Schrago, and Pete. I saw Pete on the line as well. So when we make the motion, those individuals can stay on, that would be great. And then we'll ask others to step off of the public meeting.
Yeah, that would be Pete Lonnie, our external counsel, Wigan and Dana.
Okay.
Lonnie, I'll make a motion to go into executive session based on non-public information, I guess, trade secrets, commercial information given in confidence. Is there anything else maybe for our council that needs to be in the motion to?
No, that's good.
That works for you?
Yes.
Okay, good.
Yeah.
Okay, do I hear a second?
Oh, excuse me. One moment while I confer with counsel in the room.
Yes.
Okay, Chair Reed, back to you.
Okay, so I think we're getting ready to end this meeting. Any other input? Okay, do I hear a motion to adjourn?
So moved, Adrian speaking.
Thank you, Adrian.
Second, John.
Good. Okay, all in favor?
Aye.
Aye.
Okay, opposed.
Aye.
Okay, everybody, and thank you again for being there. You know, clearly this was a very important meeting. Bye.